Welcome back to my channel. According to their recent data, house prices fell by 0.5% in March. Now, on its own, that might not sound like a big drop. But what's interesting is that it's a complete reversal from February, when prices actually rose by 0.3%. So naturally, people are wondering, is this the start of a downward trend? What does it mean for buyers, sellers, and investors? And why is this happening? Let me introduce myself. My name is Simon Zucchi. I've been investing in property for over 30 years, and for the past 23 years, I've been helping others become more successful investors as well. One thing I've consistently noticed is that many people feel uncertain about when the right time is to enter the market. Most people tend to feel confident buying when prices are rising. Ironically, that often means they enter the market after prices have already increased significantly. The reality is, like any other market, property moves in cycles. Prices go up, and they also come down. If you zoom out and look at the long-term picture in the UK, property values have generally trended upwards. That's largely because we're an island with limited housing supply while the population continues to grow. In simple terms, demand has historically outweighed supply, and that pushes prices higher over time. So if that's the case, why have we just seen this dip in March 2026? And could it be an early warning sign of a bigger drop ahead? A key factor behind this recent movement is uncertainty, particularly linked to geopolitical tensions caused by the Iran war. One immediate consequence of such conflicts is rising oil prices. And because oil plays a role in almost every part of the economy, from transportation to manufacturing, higher oil prices tend to push up costs across the board. This leads to inflation, and when inflation rises, the Bank of England typically responds by adjusting interest rates to bring it under control. Higher interest rates slow down borrowing and spending, which helps cool inflation. Before the recent geopolitical developments, many expected interest rates to start falling. However, in the latest Bank of England decision, they voted 7-2 to keep rates unchanged, choosing to wait and assess how inflation evolves. It's important to understand that these economic effects don't happen instantly. It takes time for rising costs to filter through into everyday prices and overall inflation figures. However, lenders reacted quickly. Many increased their mortgage rates almost immediately after the war began, even before the Bank of England made its decision. This brings us to an important question. What will happen next? Will interest rates stay where they are? Could they decrease? Or if inflation rises further, might they increase? This uncertainty has a direct impact on the housing market. When people are unsure about future interest rates, they become more cautious. Whether it's a first-time buyer, someone moving home, or an investor, everyone is thinking carefully about mortgage costs. If there's a risk that borrowing could become more expensive, many people choose to wait rather than commit. They hold off decisions until there's more clarity around inflation, interest rates, and the broader economic situation. To understand what could happen next, it's helpful to go back to basic economics. Supply and demand. When there are more properties available than buyers, prices tend to fall. When demand exceeds supply, prices rise. Right now, we're seeing a shift. There are a large number of properties coming onto the market. Many of these are from homeowners looking to move, but a significant number are from landlords. Why are landlords selling? One reason is the upcoming Renters' Rights Act, which is set to come into effect on the 1st of May. Some landlords are concerned about the increased rights for tenants and the potential challenges this could create. As a result, many are choosing to exit the market. This has led to an increase in supply. However, demand hasn't kept up at the same pace. So instead of a balanced market, we currently have more sellers than buyers. That said, there are still active buyers in the market, both homeowners and investors. In fact, many experienced investors see this as an opportunity. When there are motivated sellers, it becomes easier to negotiate better deals. Interestingly, falling prices often create hesitation. Some people think, maybe I should wait until prices drop further and buy at the bottom. It sounds like a smart strategy, but there's a problem. No one knows exactly where the bottom is. It's entirely possible that this small drop is temporary and prices could rise again soon. or they might continue to soften for a while. The truth is, it depends on several unpredictable factors, including the war, inflation, and interest rate decisions. In the meantime, if buyers hold back and sellers need to sell, prices can be pushed down further. Many sellers reduce their asking prices to attract interest. Buyers, knowing it's a softer market, often make lower offers, and some sellers accept them just to secure a sale. This is how average property prices begin to decline, through a series of negotiated deals below asking price. From what I'm seeing personally, more landlords are listing properties for sale than I've ever seen before. As the founder of the Property Investors Network, I regularly speak with investors across the UK, and there's a noticeable level of concern among many of them. At the same time, there are investors, myself included, who view this as a strong buying opportunity. When the market slows down, there's less competition and more room to negotiate. In contrast, when the market is booming, it's much harder to secure good deals. So where does that leave us? The honest answer is that no one can predict the market with certainty. Personally, I don't believe we're heading for a major crash. However, I wouldn't be surprised to see prices soften a little further in the short term. And for those who understand the market, that can present valuable opportunities. It's worth remembering that by the time everyone agrees the market has hit the bottom, it's often already too late to get the best deals. When confidence returns and people expect prices to rise, sellers become less willing to accept discounts. That's why many experienced investors prefer to buy during periods of uncertainty, when sentiment is low and negotiating power is higher. Of course, this approach only works if you follow sound investment principles. One of the key rules I always emphasize is to invest for the long term. Short-term fluctuations matter far less when you have a long-term strategy. So, while the market may feel uncertain right now, there are still opportunities for those who are prepared and informed. If you're interested in property investing, the most important step is education. Take the time to understand the market, learn the strategies, and build your confidence before making decisions. There are also resources and training available to help you take your next steps and potentially secure your next property deal. Thank you for watching. If you found this useful, feel free to share your thoughts. Do you think the market will fall, stabilize, or recover? It's always interesting to hear different perspectives. Before making any decisions, it's important to take a step back and look at your own personal situation. The property market might be uncertain, but your strategy should always be clear. For example, if you're buying a home to live in for the long term, short-term price movements may not matter as much. Over time, property values tend to balance out, and what feels like a small drop today may be insignificant years down the line. On the other hand, if you're investing, then your approach needs to be more calculated. You should be focusing on fundamentals, things like rental, demand, location quality, and long-term growth potential, rather than reacting emotionally to short-term market headlines. Another factor to keep in mind is financing. Mortgage rates play a huge role in affordability. Even a small increase in interest rates can significantly affect monthly payments. That's why many buyers are currently taking a cautious approach. However, caution doesn't always mean inaction. Some of the best opportunities in property come during periods of uncertainty. When fewer people are actively buying, those who are prepared often have the advantage. Sellers who need to move quickly may be more open to negotiation, which can create favorable deals. But it's essential to stay realistic. Not every property is a good deal just because the market has slowed. Due diligence is more important than ever. Checking the numbers, understanding the risks, and ensuring the investment makes sense both now and in the future. There's also a psychological side to all of this. Media headlines and public sentiment can heavily influence how people feel about the market. When the news is negative, fear increases, and that often causes people to delay decisions. Yet, experienced investors tend to think differently. Instead of following the crowd, they focus on timing their actions based on data, not emotions. It's also worth noting that markets don't move in straight lines. Even within a broader downward or stagnant trend, there can be short periods of growth or stability. That's why trying to perfectly time the market is extremely difficult. Rather than waiting for the perfect moment, many investors focus on securing the right deal. If the numbers work, the location is strong, and the long-term outlook is positive, then the timing becomes less critical. Looking ahead, much will depend on how key factors develop, particularly inflation, interest rates, and global stability. These elements will continue to shape buyer confidence and overall market activity. If inflation begins to ease and interest rates stabilize or decrease, we could see confidence return fairly quickly. On the other hand, if uncertainty continues, the market may remain slower for a while longer. Either way, preparation is key. This is a time to learn, analyze, and position yourself correctly. Whether you decide to buy now or wait, making informed decisions will always put you in a stronger position than simply reacting to market noise. In summary, the UK property market is going through a period of adjustment rather than a clear-cut crash. Prices may fluctuate, sentiment may shift, but opportunities still exist for those who understand what they're doing. Stay patient, stay informed, and most importantly, focus on your long-term goals rather than short-term uncertainty. And if you'd like to see more content like this, make sure you stay updated for future videos.